The stock market has definitely lost its way. You might even say it has lost its target. How's it going? Welcome back to my channel. This is Pradeep and you're watching Vlog of Note. In this video, I'm going to tell you about 3 things that you can do when the market crashes. Let's get started. So first of all, usual disclaimer here, I'm not a SEBI registered expert, I'm not a certified financial planner. If you want to make your own investment decisions, you should do your own market research. I'm just a person who has made a reasonable amount of money by investing in the stock market. Now, there is no better indicator that the market has crashed than the NASDAQ composite in the US. The NASDAQ composite, what is it? Well, it's a market capitalization weighted index and it has over thousands of companies in the US and it has declined quite a bit since the high in November of last year. Why has it declined? Well, we'll get to that in a bit, but in a word, it's technology stocks. Basically, technology stocks make up over half of the NASDAQ's weight and that's 3 times more than any other sector. And for the last 5 straight weeks, the NASDAQ has been in decline. The last time that happened, it was 2012. Yes, that 2012. Why is the NASDAQ crashing? Well, in a word, inflation. Inflation is a situation in which there is too much money and too few goods and services. Basically, the Fed in the US used to pump quite a lot of money in the US because of pandemic and therefore the market has suffered inflation. As the Fed starts to raise interest rates, obviously the value of stocks will come down because the valuation of companies as a discounted future cash flow method will come down. Oh, and there's also a supply chain thing because of 2 long lockdowns in China and this whole Russia-Ukraine thing. Basically, the world is in a bad shape and therefore the market is in a bad shape. If you've invested in a tech stock in the last 1 year, you probably lost about 70% of your value. There are 3 things that you can do in a stock market that has crashed. The first thing is that you can buy the dip. Now, this is a very common philosophy. It's called buy the dip-itis, and a lot of people have been trying it in the last 1 year. However, they have been wrong about whether it's an actual dip or not. My recommendation is to slowly add to your stocks. Now, in your stocks, there will be some stocks which have gone up and there will be some stocks which have gone down. As to which stocks you choose to increase your position in, it will depend on the companies in which you have the maximum conviction. There is also the danger of trying to catch a falling knife. That basically means the price of a security has fallen sharply and you mistime the bottom. Basically, after you buy it, it goes down by a further 50%. Ouch. In my experience, you should look at value, valuation, and verification. Value means the value that that company is adding to society and their customers. Valuation is the discounted cash flow valuation of a company. And verification means is some great investor, not a TikTok influencer, investing in that company. For example, Warren Buffett is the epitome of buy the dip because in the last 3 months alone, he has invested over $40 billion into this market. The second thing that I think you can do when the market crashes is rebalance your portfolio. Now, this is a painful exercise and you are bound to lose money. Take the example of Bill Ackman from Pershing Square Capital, who basically invested $1.1 billion into Netflix in January of 2022 and sold his entire position in March of 2022 after taking a haircut of $400 million. Basically, he lost 40% of his investment in 3 months' time. Now, the reason he did this is because had he continued to be invested, he likely would have lost further amounts of money. If you want a tip on which sectors are bound to do well in the next decade, it's probably energy, at least according to Warren Buffett. And also, if you're trying to rebalance your portfolio, you should be aware of the valuation of the company that you're trying to invest in. For example, in the case of Cloudflare, it is one of my holdings and I've chosen to add to my position in this particular company. But I do understand the fact that this company is not going to be profitable and therefore that will affect the value of my investment. The third thing that I think that you can do when a market crashes is do nothing with your portfolio. Pay attention here. Do nothing with your portfolio here. For example, in the case of Jack Hough in the Barron's Streetwise podcast, he said that apparently in 2012, when the market was crashing, he was too busy chasing after a woman to worry about his portfolio and therefore he did just fine. Now, if you have invested in a company with good leadership, for example, Uber, you will realize that the leadership of that company is aware of the situation and they will do what needs to be done. In the case of Uber, Dara Khosrowshahi has been meeting with investors and is saying that they're going to cut down on marketing and treat hiring as a privilege. That's correct in my opinion. When I say do nothing with your portfolio, that should not stop you from investing in yourself. At least according to Warren Buffett, investing in yourself is the best hedge against inflation because it's tax-free and you can charge what you want for your goods or services. There you have it, 3 things that I think you can do when a market crashes. Now, I know you're in a lot of pain. Most of us have lost at least 20 to 30% of our portfolios. I'm right there with you. I hope that we'll all get through this in the end. Thank you so much for watching this video. If you enjoyed it, please give it a thumbs up. As always, please go over to YouTube, subscribe to the Blog of Note channel, ring that notification bell so that you never miss a video, and I will see you guys in the next episode.